Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. If you have questions or topics that you would like to discuss, whether on this topic or even unrelated topics, please chat those over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Today's topic is how the IRS allows you to open an E-Trade solo 401k in 2026 and still fund for 2025. So we're going to talk about how to get a fully featured solo 401k from my solo 401k financial, be able to have the accounts at E-Trade and still make those 2025 solo 401k contributions. So if this session is helping you feel confident about your future or otherwise helping you, please do like this video as it'll help us to get the word out to other solopreneurs like yourself. Please also subscribe as we do go live every single day so that you can get notifications of when you will go live. You get notifications of all of our crucial content that we deliver every day to help you secure your retirement. Again, welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Again, this is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. So while you're chatting over your questions, let's dive in and start to go through some of the slides that we wanted to share. So again, we want to focus on how you can open a solo 401k with my solo 401k financial here in 2026 and make contributions for 2025, and specifically how you can have the holding accounts at E-Trade. Now, we first want to lay the foundation in terms of who's eligible to set up a solo 401k. A solo 401k is for an owner-only business with no full-time W-2 employees. So the eligibility criteria will require that you report earned self-employment income on your taxes. Now, there's different ways to report earned self-employment income. For example, if you're a 1099 independent contractor operating as a sole proprietor, or maybe you have a single member LLC that's taxed as a disregarded entity, so it's taxed as a sole proprietor. Earned self-employment income would be income reported on Schedule C of your 1040. Whereas if your business is taxed as an S Corp or a C Corp, earned self-employment income would be income that you receive as W-2 wages from your business taxed as an S Corp or a C Corp. Lastly, if your business is taxed as a partnership, earned self-employment income would be income reported on line 14 of the K-1 that you receive from the partnership. The other part of the eligibility criteria requires that you have no non-owner, non-spouse, full-time W-2 employees. So a full-time W-2 employee would be an employee that's age 21 or older, who's working as a W-2 employee, and who's working at least 1,000 hours a year with a year of service, or 500 hours a year for 2 consecutive years. So this rule will not prevent a spouse from working in the business as a W-2 employee. So it would have to be a non-owner, non-spouse full-time W-2 employee. It would also not prevent the self-employed business from hiring contractors, provided that they're working as 1099 independent contractors. Ultimately, the solo 401k may be ideal for people who are self-employed, working as consultants, realtors, freelancers, and other small business owners. So just to finish with the eligibility considerations, here are some of the top FAQs. Do I need a separate legal entity? The answer is no. We have many, many clients who operate without a formal legal entity. For example, operating as a sole proprietor. You do need to report earned self-employment income on your taxes, but there's no minimum amount of earned self-employment income that you would need to report in order to be eligible to set up a solo 401k. Your spouse or business partner may participate as long as your spouse or business partner are reporting their own earned self-employment income, such as their own Schedule C or their own W-2. You can set up a solo 401k even if you have a W-2 day job, even if you're participating in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Now, for those who did not set up a plan on or before the end of 2025, in other words, on or before December 31st, 2025, so they're late starters. Many are asking, can you still set up a plan now in 2026 and make 2025 solo 401k contributions? And the answer is yes. Now, the specifics will depend on how your self-employed business is taxed. So if you signed up before December 31st, 2025, then you would have preserved the ability to make all types of solo 401k contributions, including employee, employer, and or voluntary after-tax contributions by your 2025 business tax return deadline, including any timely filed extension in 2026. But if you are a late starter and you didn't set up a solo 401k, either with my solo 401k financial or with someone else, and now you're first setting up a new solo 401k here in 2026, the type of contributions that you can make and when you have to make those contributions by will depend on how your self-employed business is taxed. So if your self-employed business is not taxed as a sole proprietor, let's say you're an S corp or a C corp or a partnership, if you did not sign up with us before the end of the 2025, or if you didn't set up a solo 401k anywhere else before December 31st of 2025, then it's too late to set up a solo 401k plan now in 2026 and make 2025 employee contributions. But there's still time, even for those S corps and C corps and partnerships, to set up a new solo 401k in 2026 and make employer and or voluntary after-tax contributions for 2025, as long as you set up the plan in time to make those employer and or voluntary after-tax contributions for 2025 by the business tax return deadline, including any timely filed extension. However, now if your business is taxed as a sole proprietorship, let's just say you don't have a legal entity, or you do have a legal entity, but it's a single member LLC taxed as a disregarded entity. In other words, it's taxed as a sole proprietorship where you're reporting the income on Schedule C of your 1040. So for those whose self-employed business is taxed as a sole proprietorship, you could even set up a new solo 401k in 2026 and make all types of contributions, including employee contributions. But you would need to make those employee contributions by April 15th of 2026. If you file an extension for your 1040, that will extend the deadline to make employer and or voluntary after-tax contributions for 2025, but it would not extend the deadline to make employee contributions if your business is taxed as a sole proprietorship. So that's the special rule for sole proprietors. Everyone still has time to set up a new plan in 2026 and make 2025 contributions. But if your business is not taxed as a sole proprietorship, it's too late to make employee contributions for 2025. If your business is taxed as a sole proprietorship, you could still set up a plan in 2026 and make 2025 employee contributions, but you'd have to make those employee contributions by April 15th. So ultimately, no December 31st setup is required, but you're going to be limited and how and what types of contributions you can make and or when you have to make those contributions by. So the critical deadlines, again, is the business tax return deadline. In other words, how your self-employed business is taxed. Now let's talk about how you can pair my solo 401k and E-Trade. In other words, how you work with my solo 401k and have the accounts at E-Trade. And the key to unlock the understanding is the fact that a solo 401k is a legal entity. Like any 401k, it's a trust. And like any legal entity, it's the documents that create it. So our solo 401k clients are obtaining the 401k plan documents from my solo 401k financial, and then we're helping them open up the holding accounts at the bank or brokerage of choice. We're totally neutral as far as where those holding accounts are opened up at. And one option is certainly E-Trade. In other words, E-Trade will offer their own basic vanilla solo 401k. For example, that doesn't support the $1,500 tax credit, right? Where they don't prepare the 5,500 EZ, so it's not going to have the advanced support. It's not going to have the advanced features. But at the same time, E-Trade will open up free brokerage accounts for people that bring their own plan documents. So the My Solo 401k solution is to obtain the 401k plan documents from My Solo 401k Financial and then open your accounts at E-Trade. And we are very hands-on in helping customers open up those accounts. In other words, we would prepare the paperwork that E-Trade requires to open up an investment only account at E-Trade. That's what they call a brokerage account that's opened up at E-Trade that's governed by a third party plan document. And as stated, you can still get the plan documents. You can still open up the plan here in 2026 with my solo 401k financial. Then we'll help you open up accounts at the bank or brokerage of choice, including E-Trade, and you could still make 2025 solo 401k contributions. Now, you do want to sign up early to allow time to create the plan documents and open up the accounts. In terms of the plan documents, my solo 401k financial is very fast. We prepare the plan documents within the same business day when you sign up. Now, E-Trade, though, is going to take longer to open up the accounts based on client experience and feedback. So that's why it's going to make sense to sign up now to give yourself time to get the account set up, to give yourself time to um, determine how much you're going to contribute and actually contribute, deposit those contributions, in other words. Now, the mysolo401k.net advantage is that we have a fully featured solo 401k plan, and we provide the solo 401k compliance support. So, what do we mean by that? Well, take Roth, for example. The ability to make Roth contributions is one of the top features of our plan, one of the most popular features of our plan. And we've got all the tools in the toolbox under the rules to be able to maximize the dollars that end up in a Roth account, where, like any Roth account, there's going to be that potential for tax free growth. So, for example, one tool is that you can make Roth contributions, including Roth employee contributions, mega backdoor Roth contributions, and or employer Roth contributions. So, our solo 401k plan documents, our IRS approved plan documents allow for all types. Moreover, our plan documents allow for in plan Roth conversions. This is where you have pre tax dollars that are already in a retirement account. It could be in a former employer plan, it could be in an IRA, it could be pre tax contributions that you made to the solo 401k. Well, our plan documents would allow you to convert those dollars from a pre-tax status to a Roth status. Now, that's of course going to be taxable for the year of the conversion. It's also going to be reportable. Needs to be reported on a Form 1099-R. And what's great is that we handle that 1099-R. We do it for no additional charge. Clients or their advisors would just need to submit our online form in a timely fashion to give us the information that we would need to prepare the 1099-R. Now, additional advantages, additional features include the fact that Our plan is the first solo 401k plan that makes the self-employed business eligible to claim tax credits. These tax credits have been available since 2024, and we've offered a plan since the beginning that supports the tax credits. So those are $500 per year in solo 401k tax credits for a total of 3 years, $1,500 in total. These are tax credits, not tax deductions. So it is a dollar for dollar reduction in the tax liability. Ultimately, that means it's going to more than cover our fees for the first 7 years. What are our fees? Well, we charge 100% flat fee, regardless of the value of the plan, regardless of the support needed. We charge $650 as an initial cost, which includes the $525 establishment fee, plus the first $125 annual fee. Then, starting 12 months later, we charge our $125 annual fee that covers the second year. So, if you were to add up our fees over the first 7 years, it wouldn't even amount to $1,500. So, those $1,500 in solo 401k tax credits is going to effectively make the plan free for the first 7 years. Additional support is the Form 5500 EZ and 1099R support, which we handle for no additional charge. Customers or their advisors just need to request it in a timely fashion. So, for example, the Form 5500 EZ, that's an informational tax filing that has to be filed once the value of the solo 401k plan, including the value of any defined benefit plan that might be sponsored by the solopreneur, once the total value of all the assets, the accounts, etc., exceeds $250,000. So customers, their advisors, just let us know once you've crossed over that $250,000 threshold, so that we can add your plan to the queue, so that we can take you through the 5500 EZ filing process, where ultimately we file that 5500 EZ under the electronic filing system to make it easy for the client, for the advisors, etc. Now, 1099R support, that will be needed in different situations. For example, it would be needed when someone's making a mega backdoor Roth contribution. Because when you make a mega backdoor Roth contribution, it's really a two-step process where you first make a voluntary after-tax contribution to a separate voluntary after-tax account, and then move the money from the voluntary after-tax solo 401k account either to a Roth solo 401k or a Roth IRA. So while that first step, the voluntary after-tax solo 401k contribution, doesn't need to be reported on the personal or the business tax return, doesn't need to be reported on the W-2, for example, if the business is taxed as an S corp. The second step, when you transfer the voluntary after-tax dollars either to a Roth solo 401k or a Roth IRA, that does need to be reported by the plan. And we have a form on our website that clients or advisors can use 24/7 to provide us the information that we need and prompt us to prepare that 1099R. Additional features and advantages is the fact that our plan allows for investing in alternative investments. So here we're talking about true alternative investments, whether that's real estate, crypto, private placement, pre-IPO stock, et cetera, et cetera. Next is the fact that our plan supports solo 401k participant loans. So with a 401k participant loan, you can literally withdraw funds from your 401k and use those funds for any purpose whatsoever, including a business purpose or a personal purpose. And that is not going to be subject to taxes or penalties when you withdraw those funds, provided that the loan is within the terms, document, documented as a loan and paid back according to those terms. So those terms are going to require that the loan is limited to no more than 50% of the balance, not to exceed $50,000. Again, it needs to be documented, and we handle those loan documents for no additional charge. Clients or their advisors just need to submit a form on our website to prompt us to prepare the loan documents. Now, that loan would need to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest rate is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. So ultimately, next steps, how to get started, is complete the online application at mysolo401k.net. Just takes a minute. We just asking for straightforward information that we would need to prepare the documents. Once the application and payment is submitted, We prepare those IRS approved plan documents specifically for your self-employed business within the same business day. An email goes out with a link to our secure portal where you can download those documents. And then from that link, you're going to be able to tell us, or I should say, from that email, you're going to be able to tell us where you want to have the accounts at so we can guide you through the process to open up the accounts at the bank or brokerage of choice, whether it's at E-Trade or Fidelity or Schwab or a bank, etc. Okay, wonderful. Again, if this information is helping you feel more secure about your retirement or just otherwise helping you, it would be fantastic if you could please like this video on whatever platform you're watching on, whether you're watching this on LinkedIn or X or YouTube. Please like this video as it helps us to get the word out to other solopreneurs just like you who might be likewise looking to secure their retirement savings. We also invite you to subscribe as we go live every single day. We were live earlier today. This is the second session of the day. If you subscribe, you'll get notifications so you can see the content that we're bringing to share every single day if you're interested in that specific topic, or if you just want to come and ask questions or hear what other folks are asking. So with that in mind, let's turn to the questions. So our first question is from Shirley. We have a solo 401k set up by your company. Thank you so much, Shirley. The solo 401k trust holds a real estate property for rental. We like to get limited liability protection for this rental. Is it possible to create an LLC and have the solo 401k be the owner of the LLC, then deed the real estate from the trust to this LLC owned by the trust? Yes, it is. So in that case, it would need to be a brand new LLC where the sole member of the LLC is the solo 401k. The solo 401k owner would act as the manager. As you mentioned, the title of the property would be transferred to the LLC. One would need to open up a bank account under the name and EIN number of the LLC that's owned by your solo 401k. And then that way, you would have the tenants make the checks payable to the LLC. All the income and expenses related to that real estate investment would be held and processed through that LLC, et cetera, et cetera. So it's certainly possible to have the 401k invest in a brand new LLC. Hopefully that makes sense. Thanks for bringing that fantastic question, Shirley. All right, we'll give it a moment to see if any more questions come across. We'll also invite you to our community. We have the largest community of solo 401k owners, solo 401k preneurs, solo 401k advisors, et cetera, which means that we have a vibrant community with a vibrant forums. We've got a library of videos and webinars. It's totally free to join. All are welcome. So please don't hesitate to join. You can join quickly and easily at mysolo401k.net/my community. It's not just for clients. All are welcome. It's free to join. Please don't hesitate to join. All right, well, it looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement. Got a quick follow-up question from Shirley. If we also want to convert the real estate from pre-tax to Roth under the trust, we can do that too, correct? Yes, it is possible to do an in-kind, in-plan, pre-tax to Roth conversion. Now, the title would remain as is. So you don't retitle property just on account of the conversion. So for example, if it's titled in the name of the solo 401k, it would still be titled in the name of the solo 401k on account of the conversion. If it's titled in the name of the LLC that's owned by the solo 401k, it would still be titled in the name of the LLC that's owned by the solo 401k. So it would really be done in the records of the plan. Now, you would need to have a separate account for those Roth solo 401k funds. So all the income and expenses related to that solo 401k investment would go in and out of the account. Now, if the Membership of the LLC is simply just transferred from the pre-tax solo 401k status to a Roth solo 401k status. You could just continue to use that same LLC account. Now, if you're doing an in-kind, in-plan pre-tax to Roth conversion, that is going to be taxable for the year of the conversion. And since this is not a cash conversion, the individual would need to know the value of the real estate. And so that is something the individual would certainly need to document with third parties. So third party documentation could be, for example, done by a local expert like a realtor using comps in the area. But specifically because it's pre-tax, you want to make sure you have robust documentation, maybe multiple uh, assessments of the valuation and taking the average is approaches that others may have that we've seen others do, for example, in the past. And then you would need to let us know about that pre-tax to Roth conversion via submitting one of the forms on our mysolo401k.net forms page. Specifically, we have a pre-tax to Roth in-plan conversion form, and you would provide us the value of the real estate so that we can prepare a 1099-R reporting that as a taxable event. And then the solo 401k owner would need to add the value of the converted asset to their income for the year of the conversion. And then going forward, you'd have that potential for tax-free growth, as long as when you ultimately withdraw the funds from the Roth solo 401k account, you withdraw it as a qualified Roth distribution, meaning you've had the account for at least 5 years and you're at least 59 and a half years of age at the time of the withdrawal. Great questions, Shirley. We'll give you a second to see if you chat over any more follow-ups. But no, we do appreciate everyone taking the time to join. Appreciate all the great engagement. Please don't hesitate to join. Again, there's still time to set up a plan here in 2026 and make those 2025 solo 401k contributions. Yes, the LLC account can be set up at any bank. You're just opening up a bank account under the name of an LLC. So virtually any bank can set up an account for an LLC. You, as the manager of the LLC, are setting up the account under the name and EIN number of the LLC. All right, until next time, everyone, take care. Yes, the LLC is owned by the trust. So the solo 401k is the member, but the solo 401k owner is the manager. So the owner is the solo 401k and the manager is the natural person, solo 401k owner.